What happened to Terra LUNA, which several traders that hurried to buy LUNA tokens didn't realize, was inflation of the entire circulating supply. The high inflation prompted the Terraform Labs team to pause the Terra blockchain. But the damage had been done. Hyperinflation caused the LUNA supply of coins in circulation to hyperinflate from about 350 million to 6.5 trillion, an over 18,000 times increase. According to the law of supply and demand, anything becomes 18,570 times less valuable per unit if there are 18,570 times more of it. No longer rare or scarce, the Winklevoss twins, millionaire founders of Gemini Exchange, have referred to cryptocurrency as digital gold. Now the question is, why did LUNA face such a fatal crash and went from $100 to $0.0002? Hello, and welcome to another The Trend video. In this video, we are going to talk about the reason behind LUNA's fall from glory and what to expect from it in the coming days. Before moving further, kindly like this video and subscribe to our channel so that you don't miss our upcoming amazing videos. Let's get started. So LUNA dropped over 99% from its all-time high of $119 to under $1, then 99% to 1 cent, then 99% twice more until its current 2022 low of $0.0000112 against Binance USD, one of the few trading pairs still available for it at that time. Many crypto exchanges delisted it. It didn't help that Bitcoin went below $30,000 and the S&P 500 dipped below 4,000 points for the first time in almost a year on the same day. Considered one of the most regulated and secure crypto platforms for newcomers, eToro.com suspended LUNA trading at a little under 1 penny, sparing buyers of LUNA crypto tokens from 2 of the 99% dips. What caused the drop is complex, and many LUNA investors are questioning what happened to the coin that was previously among the top 10 crypto assets by market capitalization. A brief background of Terra LUNA. The Terra LUNA crypto asset was designed to facilitate the creation of stablecoins for decentralized finance applications, which made the LUNA crash distinct from other crypto market crashes. Anyone around the globe could and did use it as a payments network, without the requirement for a central bank, banking institution, or centralized entity such as Visa. Individuals could act as their own payment processors. Goldman Sachs describes DeFi as easier to use for underbanked communities and faster settlements for consumers. Stablecoins were kept stable, tied one-to-one to the dollar or another local currency, by allowing the exchange of units of the stablecoin for an unstable native token. In South Korea, a stablecoin was linked to the won, and in Mongolia, a stable currency for the tugrik was issued using LUNA, algorithmic stablecoins. Terra was the native token used to maintain the stability of Terra USD, the principal and largest stablecoin produced by Terra Labs, with a one-to-one peg to USD. If the stablecoin deviated from the downside of its peg, becoming worth less than $1, LUNA might be used to mint new UST and stabilize UST overall. Then, if it lost its peg and became worth more than $1, the UST could be exchanged for LUNA in order to reduce the price of the UST. In this dual token system, the mint and burn effect was regulated by an algorithm and occurred automatically. The two cryptocurrencies supported one another until it stopped working. In a chain reaction, if one fails, the other can as well. And this is what happened during the crash. UST loses its peg. It began when UST lost its peg to a greater extent than usual. There's still no official explanation as to why, and there are numerous reports of a coordinated attack, such as a huge institutional entity or whale borrowing a significant quantity of UST to dump on the market. Do Kwon, the CEO of Terraform Labs, had made enemies in the crypto sector by trolling various crypto projects on Twitter, drawing condemnation from Sam Trabucco at Alameda Research, Sam Bankman-Fried at FTX, and Charles Hoskinson, the founder of Cardano, among others. 2 months before the Terra crash, several crypto traders on Twitter even claimed that LUNA was a pyramid scheme. They noted that, unlike other successful stablecoins, this one lacked the sufficient currency reserves. It was reported that LUNA Foundation Guard was one of the biggest Bitcoin holders in the world, which prompted investors to purchase LUNA and Bitcoin. However, it appears that these reserves were insufficient. LUNA crash explained. The first UST decline was far more severe than usual. These holders of UST did not wait for it to recover before selling their UST for LUNA, thus increasing the LUNA supply, which was then panic sold. The crisis worsened when UST lost 90% of its value, and LUNA fell even worse. Typically, a cryptocurrency crash, whether it Bitcoin or altcoins, is caused by panic selling, shorting, stop losses being triggered, and a liquidation cascade in which long positions are compelled to sell. The total supply of coins, including those in circulation and those still locked away, remains constant. Therefore, if the panic was caused by FUD, fear, uncertainty, and doubt, which was caused by negative news, such as China banning Bitcoin, a crypto exchange being hacked, or a pandemic, that has since faded from the headlines. The coin can recover, as neither the coin's intrinsic value nor the underlying technology has fundamentally changed. There is still the same number of coins in circulation, or slightly more because the process of mining new Bitcoins is designated to be extremely gradual, so they remain scarce. Only on exchange platforms, where panic ensues and long-term investors purchase the blood, does the value actually fall. However, with the Terra LUNA crash, due to the nature of the algorithmic stablecoins, the black swan occurrence produced hyperinflation of the Terra LUNA supply, which swiftly reached 1 billion and then spiraled into the trillions. Can LUNA recover? The only way for the LUNA price to rebound to anything close to its prior high of over $100 would be to reduce the LUNA circulation supply from its current level of 6.5 trillion to its pre-crash levels of approximately 350 million. It has been proposed as part of the LUNA and UST recovery plan, but it remains to be seen whether it can be accomplished. Another concern is whether cryptocurrencies will recover. Bitcoin is stabilized around $30,000, but it has not yet broke out of the upside or closed a candle above the daily EMA 8. If the Terra supply is not consumed, it is statistically impossible to recoup even $1. In November 2021, when Bitcoin exceeded $69,000 and Ethereum over $4,800, the market capitalization of all cryptocurrencies peaked at a little over $3 trillion. At a LUNA price of $1 per coin and a supply of 6.5 trillion coins, LUNA's market capitalization would be more than twice that of all cryptos at that all-time high. Bitcoin's market capitalization is currently about $575 million. If the LUNA market capitalization hit 9 cents, Bitcoin would be worthless. No cryptocurrency has ever beaten Bitcoin. It would flip Ethereum, which is also implausible because so much of DeFi operates on ETH, for less than 4 cents. So is LUNA recoverable from here? Well, based on tokenomics, it can't revive until the supply in circulation is lowered. LUNA price today. The current LUNA price is roughly $0.0018. LUNA would return to its former market capitalization of around $40 billion, which is a more realistic mid-term price target, but still difficult given the decline in Terra's reputation at approximately $0.006. LUNA is still capable of producing 100x moves and big pumps in the short term, as many traders are interested in purchasing it. Today's LUNA price is around 180 times higher than its May 13th low of $0.0000112. This week, the LUNA price peaked at $0.000595 on Binance, a 531x increase from its lows. Some professional traders will have anticipated a move of over 50,000%. In one instance, the LUNA price spiked to $0.002 in a fraction of a second, which was likely due to a fat finger market buy that caused slippage. Some traders feel that all wicks of this type will eventually be filled since they signify supply locations. That would be a roughly tenfold increase from the current price of LUNA. Some investors who decided to acquire LUNA too early on the dip or who already own the stock will be dollar cost averaging into the stock at this low price in the hopes of breaking even if the price returns to $0.002 per share. Should you buy LUNA? Binance still displays risk warnings for purchasing LUNA on its website. But if you're certain that it's cheap and will rebound to a market cap of $10 to $12 billion, it could be a smart investment. Today, the meme coin Shiba Inu has a market capitalization of $6.7 billion and a circulating supply of 549 trillion. Invest just what you can afford to lose, as LUNA is highly volatile and will spike or decrease based on Do Kwon and the Terra team's pronouncements. So what are your thoughts on this? Do you still believe that Luna is a viable investment? Let us know in the comment section below. Thanks for watching this video. If you found it informative, do like and subscribe. And don't forget to give comments and provide us with your valuable feedback. Plus, if you want to suggest a topic for the next video, feel free to tell us. See you in the next video, and until then, stay tuned to the trend.